Hi, this is Zach Muir from Zach's Traders Cafe with a look at the major markets on Tuesday, the 21st of June. Starting off with the FTSE 100, and you can see that we're still in the aftermath of this bear trap rebound from below 6,000. I suppose it was a higher low versus that 58.45 low from late February, so not entirely a surprise. Broke back above that April-May support, 60.36, or actually March support at 60.36. And also the 200-day moving average at 61.45, all in one go. The view at the moment is that we should probably hit 62.80, which is this resistance line from April at the very least. After that, we can take a view as to whether we think this market will go on further. Obviously, an end-of-day close above that would suggest that we're back to 6,400, which is the main resistance area, and that idea is backed by the RSI now at 53. Breaking back above the neutral 50 level. Best stop loss at the moment probably around 61.45 on an end of day close basis, which is the 200-day moving average. Maybe you could stretch it down to 61.04, which is the 10-day line. But really at this stage, a little bit higher looks to be the view, even after all the gains that we've already seen. Onto the DAX, and incredible chart here with this two gaps to the downside and then the massive gap to the upside. Support 98.19, which is the top of the first gap to the downside, let us just say. And while above that, we're looking for a retest of 10.365, which was the initial, well, the rather late May peak. After that, we can take a view as to whether we think this market is strong enough to break the range, which is basically between 9,500 and 10,400. On to the US markets, and obviously here a stronger picture in relative terms than what we've seen with the European markets. 18,000 the peak just before we dived to 17,500, so looking for that again. A break of 17,900 would be a good indication on a potential new and significant leg to the upside. RSI at 54 now, 54.5, so that is a leading indicator on a new leg to the upside. As far as money management is concerned, probably looking at the area of the 10-day moving average at 17.811 as the initial support for this market, but at least while we're above 17,500, the overall view is that this is looking like a positive situation. On to the S&P, and bounced nicely at this line from effectively the beginning of March 2050, cleared up above the 200-day moving average at rather the 50-day moving average at 2078, and really while we're above that on an end-of-day close basis, we're looking for 2120 initial April, June resistance. For the Nasdaq 100, we had a sort of difficult range to trade, island top situation, which failed to fill the gap there from the middle of April, and then this dance either side of the 200-day moving average. But the view at the moment is really that while we hold above this area of 43.50, 43.60, we should head back towards the 44.50 zone, which was the area of 44.50 plus, in fact, which was the initial resistance for June over the next couple of weeks. Onto the currencies, and obviously the big talking point here, the Great British Pound, heading back towards the top of the range on Remain hopes. In fact, we've hit the 200-day moving average, 146.68, and broken a major resistance line as well. So this looks like it might at least trade back up towards the 148 level, probably where all the stops are, before it runs out of steam. RSI at 60, so still potential for plenty of upside here, but probably initially this resistance zone here towards 148 is going to block this market, even if we then head higher later in the week or after the referendum result. As far as the stop loss zone is concerned, probably one we'll be looking at the 50-day moving average 144.44 as being the line in the sand as far as basically any risk of a setback for cable. Onto the euro, which has benefited, but obviously not benefited as well as Sterling this week bounced off the area, well, bounced in fact just above the 200-day moving average, 110.98. Currently grappling with the 50-day moving average at around 113. Looking for a target towards 114, at least initially. After that, there isn't much between that area and 116. So 113 trading zone at the moment. Exists initial resistance up to 114 for the rest of the week. RSI pushed above neutral 50 to just under 53, so that does suggest that we could have a little bit more on the upside, even if that fades at a later point. Going on to Japanese yen, which was last week's troubled cross. Trying to find support above 103.55. Doesn't look like it's going to last very long, but still holding at least initially. Does look as though we're going to head lower over the next few days, but at least initial support here towards 103, 103.50, even if that is going to break. Finishing off with gold, and interesting that got the 10-day moving average there at 12.77, and so far this market has managed to hold above the 10-day line. Normally, only the strongest of markets hold above the 10-day line on any retracements, and that's what gold has done so far. So impressive performance, and that does suggest that we're still on for another test of the 1300 zone, which has been May-June resistance, and then up to the top of this rising trend channel from the beginning of the year at 1350 as soon as the end of next month. That's it for me. More updates at the same time tomorrow.